Hi, welcome to the Market Alert for Wednesday, the 17th of August 2022. So the S&P eclipsed key resistance in the wake of mixed data and retail earnings. There's no stopping the market going up. Yesterday, the Dow continuing to move along with all other stock markets. US stock markets were choppy amid mixed data releases. They may have been choppy, but they still continue to move to the upside, taking out Monday's high. Massive mean melt up sparks market-wide squeeze until Harnett says sell. I don't know who Harnett is, but there seems to be this prediction, was that it for the melt up, the big move to the upside yesterday? Who knows? Mood no longer apocalyptic. Wall Street's most accurate strategist says start shorting S&P now. It's actually given a figure there if it's... fade the S&P if it trades to 4,328. That may be a ploy because they want somebody to buy off at that level. You never know with these strategists whether they're telling the truth or not, whether they're just wanting somebody to take the other side of the trade. Will the call-fueled rally expire this Friday? That's the options expiration of the OPEX, and there's a lot of, it's usually about 4 trillion now in stock options. That's to expire on Friday as well. And another one of the same theme. Are we there yet? Yeah, we are apparently. Time to get busy, i.e. shorting stocks. We'll just have to wait and see. But today is very important. We've got the UK CPI numbers, and I wouldn't be at all surprised if they don't come out at 10% given what's being said in the mainstream news with regards to this. There's all the sub-inflation data as well, RPI, which they don't report on the mainstream, but you can see it's already 12% forecast. Sorry, 11.8 forecast for 12%. They used to use that, but then they switched to the CPI because it was lower. Again, the sleight of hand of governments. PPI as well, we've got all of that as well. And then we've got some flash employment changes in Europe as well. I'm just looking to see what else. It's amazing how many news items have been downgraded to low impact when really they're not. And we've got core retail sales from the US at lunchtime, and they're showing a drop off as well, or forecasting one. We've got Bowman speaking, and we've got FOMC meeting minutes this evening as well. So we should see a bit of decent volatility today. Gold and silver ratio stuck in a sideways range, as you can see there. So more on that as we look at the metals. But first, let's have a look at the Dow and its continuing move to the upside during yesterday's trading session. So here you can see yesterday we'd already taken out the 200 MA on Monday. Tuesday the market continues to drive higher. We're now must be approaching 4,000 points in this recent move. High to low 3,824, only a couple of hundred points off 4,000 points since the 14th of July, which is not that long ago. So Dow continuing to move to the upside. Weekly chart is at 78%. The 89 is there. The next one 34,850. Before we see probably a corrective move in this market. The monthly chart also showing the same thing there as well. But they talk about the squeeze and the sort of parabolic move, and there's no doubts about it. It's certainly starting to look that way. As you can see, as I said before, you're just not getting any red down days. They will come, and they'll come unexpectedly as well. We're certainly overbought, but the stochastics are strong to the upside as well. So if we just go back to the weekly chart, so we've got to take out that 34,207 for this market to move higher. If we go back to the 30 minute, you'll see that the high there, we've already been through that 78 in the Dow. We just need to be able to hold it, and at the moment prices are heading back towards those highs. It will be interesting to see what those inflation report numbers are, but I expect they'll be discounted as before. Apart from the FTSE may quibble a bit, but the rest of the stock markets will just ignore because it's not pertinent to those countries. And let's have a look at the DAX. In the German DAX, also continuing to move higher. We're now seeing the apart from Monday, where the market didn't take out the previous day's high, prices continue to make rising lows, staying above the 5-bar moving average. The momentum has switched to the upside, and we're now looking at these sorts of fib retracement levels there of 78, which is 14,200. We're already at 14,000. We've hit this if we look at the 30-minute chart. I think, if I recall from yesterday, let's just have a look. No, we're at, what's this level here? 950. So we're 50 points off. It's this red line here. That's the 14,000 level, which is where they'll be desperate to get the market through to that this morning. If they can, don't be surprised if there isn't a move to that level. It'd be interesting when we get to it, though, that's for sure, because that's a major number for the German DAX. In the 5-minute chart, you can see yesterday this bit of a battle to begin with, but once again that 200 MA, we were oversold. We then get the retracement, the market up 100 points before being sent back down, but that was no big deal, because as soon as the US came on board, we just reversed and moved to the upside. I enjoyed a short trade on this yesterday, but the US was having none of it, and wouldn't be surprised if the plunge protection team were involved as well, but prices moved all the way back up, and actually this high is higher than the high we saw at during the morning session there as well. But a bit of a pullback there once we got to that level, and overnight the market also continuing to move higher. We've got the DP down here, 200, and the close. There's a lot on the downside to support this market, and we're only a smidge away from going through the high and then on to that 14,000 psychological level, which is that red line just there, and it's also the R1. But that's where the market's likely to go. But again, it's those UK numbers that are going to determine. Initially, you might get a shakeout before the market then discounts it and heads back. In the S&P, the market at 78% retracement, 200 MA in the daily charts. Again, rising lows, higher highs, moving to the upside, and the momentum also spiking back up to the upside there. 30-minute chart, you can see as soon as the US opened yesterday, it came on stream. This is an interesting bar. I mean, we saw this in the Dow as well. And the fact that the market retraced so quickly shows you how really, or gives a clue that when this market does correct, it could be quite catastrophic and very quickly moving to the downside, because it took several hours to get up to here. It took 30 minutes just to bring the market back to where it actually started. So the short side, when it is allowed to move to the downside, will be very fast. But we've got another couple of weeks before all the traders return to their trading desks. So we could see more upside. Again, I did take the shorts yesterday, and that were available, and they were profitable, but you really do have to keep an eye on them, because the market still wants to move to the upside. It will switch, and that momentum will go to the downside, and then it'll be very difficult to make money on the upside. So it's just catching that time. But it's certainly yesterday, the one thing that I will say is the first time since a month ago, the shorts were actually holding more to the downside, which we haven't seen, like I say, for a month. The S&P, the UK, waiting for those inflation numbers, back to 89% retracement from the July high. And again, overbought with divergence, and it's struggling more than some of the other markets, trading below the 5-bar moving average for the last few days there, and then yesterday moving above. So there's some weakness around in the UK one, but then again, the cost of living crisis seems to be dominating the news at the moment. 30-minute chart, you can see that we moved higher, whereas the DAX moved lower. We then had a pullback with the DAX during lunchtime, and then the Dow bringing the market back to the upside. That sell-off that we saw in the Dow was far smaller in the UK market there. Already at yesterday's high, unlike the other markets, and that's because there's less volatility in the UK FTSE 100. And in the currencies, great day yesterday for the yen, the market moving sharply to the upside, trading back up to 62.78%, which you can see there. 162.45, 30-minute chart. So you can see trading sideways, oversold, crossovers, demand there, breaks out, and then just moves to the upside. Moved up 150, nearly 200 points yesterday, traded sideways, and now trying to take out yesterday's high. The pounds, well, it'll be waiting for today's inflation numbers, because that's going to determine whether rates are going to have to go up again. I suspect that they will. So you may see a move to the upside on the basis of rates having to go up, but it will be slammed to the downside first in the 30-minute chart before you see any sort of recovery to the upside. That seems to be the pattern of late. During yesterday's session, we had a nice 89% retracement, oversold at the S1 crossover market up for 70 points there. And finally, in the metals, yesterday, silver down, retracing 62%, heading to the 20-bar moving average, very narrow range. Again, said it for the last few days, I'll say it again, this market's starting to look quite strongish, except it comes with the caveat of if the Dow has a major sell-off, then silver will be dragged down with it for the reasons I stated yesterday. At the moment, so we've got the potential 78% retracement that we marked up before, but on the upside you've also got the high of Monday and Tuesday, and these would be the smaller intermediate moves for the silver price. 30-minute chart yesterday, you can see the market pulling back sharply. This was on yesterday's news. They then reversed the market, and it's been moving to the upside since. It's got to get through the high of yesterday, which is 2030, but very quiet in the silver market and the gold market at the moment. Yesterday, sideways at the 62% for gold, and need to close below above the 50 and the 5-bar moving average. Again, you can do the same in this market by putting retracements in the smaller move, just to see how the market fares in these numbers. There's a lot in there. Let me just remove the 38, and if we just widen that for those that want to see those numbers, there they are. In the 30-minute gold, sideways, as I said earlier, choppy, but overnight moving to the upside. Maybe this is in advance of the UK CPI numbers, which will be released in 15 minutes whilst I'm recording this, which is why I'm speeding through it, hopefully get it to you before those numbers come out. The dollar showing a bit of supply there at the 78% retracement, and finally crude oil down at 89% with demand as well. Okay, that's it for this one. Let's see what the CPI numbers are at 7 a.m. And as ever, thanks for watching. See you in the next one.